What's up, YouTube? Welcome back to another video. And in this video, it's gonna be a really simple video. We're just gonna be going over CHF-JPY. We're kind of gonna go over like market cycle, and then we're just gonna like have a whole outlook on CHF-JPY. Just talk about some things like that. You can look at some entries, some possible supply and demand areas. We're just gonna go and look and see what the idea behind each trade, and what the idea behind like the process of looking for a trade, and like how to actually like just go in and just look at the market. If you guys want to join Discord, link in the description. If you want a one-on-one session, you want to talk to me about something, you have questions, you want to go over some markets or whatever the case may be, you can contact me on Instagram, or you can message me on Telegram. Either one is good. It doesn't matter to me, whichever one is better for you. So yeah, let's get into this video. So I was looking at CHF-JPY, and I thought this could be a good video to just talk about, and we can just go over some stuff. We can talk about this accumulation, this re-accumulation, and we can talk about this market cycle that's going on here. But before we do that, let's get to the purpose of why we're looking for an accumulation here. So the first thing that you could really notice when you zoom out, as you can see how bullish CHF-JPY is, right? Since we started from here, this big accumulation that happened there. So accumulation, Wyckoff, schematics, all of that, fractal, right? Like I told you guys before, everything, this market is super fractal, and I'm gonna show you a good example of that later. Market is very fractal. What you see happen on the higher time frame happens on the lower time frame, on the seconds time frames. Like, yes, very fractal. So see the reaction here, boom, CHF-JPY took off. So essentially came back down. Look what happened again. We accumulate again. So once we did this accumulation again, this started my lower time frame leg right here. Well, yeah, this started my lower time frame leg. So essentially we are bullish from here up to here based on lower time frame. Now higher time frame, we are still like super bullish, right? Until we kind of take out this low, we're still bullish. So but lower time frame, looking for like lower time frame entries, or like maybe like scalp entries, or whatever the case may be. If you're just trying to look for that, like swing trading wise, you use the higher time frame structure of your swing trades, right? But when you're looking at lower time frame, and me personally, I trade multi-time frame. I like to trade intraday. If I can, I'll try to swing, but if not, if intraday plays are not going on right now, or if I don't see any higher time frame swing plays, which those kind of take some time, so more likely you're looking at the intraday and maybe like day trades and scalps and stuff like that, then that's when you try to play like with the lower time frame. The intraday time frame, when you have that, you just use it to know where the intraday structure is at and what the bias is, because once this lower time frame structure gets invalidated, you have to rely on the intraday, because the intraday is still bullish. Okay, the intraday is still bullish. So the market structure overall hasn't traded because the intraday is over the lower time frame. This is one thing that happens when you're trading smart money, and people get confused, like, what order block do I use, or like why is this order block failed, or anything like that. You have to implement structure as well. So going off just this leg right here, from this low to this high, right? Once we create this high right here and we start this reversal, understand, as you can see, you see all these little small areas in here. All these areas are liable to fail. All these areas are like, why? Because all these areas here, you can see all these are just reaccumulations. If I go on lower time frame, you can see all these are just reaccumulations. Reaccumulations are continuation moves. This right here is the origin. Okay, most of the time you're going to see the market come back to the origin. Sometimes you can see small reactions off of these reaccumulations right here, but they're not more likely to hold than this, because this is where institutions place orders, right? So this is more likely to hold than these small moves here. So I know you can go on lower time frame, you can see some clean order blocks in here, some clean sponsor candles, and people will set limits off them and be like, why did this fail? Well, this is not a part of the origin. This is not a part of where the move happened. This right here is what caused this to happen. Okay, so if you're gonna set a limit anywhere, set a limit down here. Okay, set a limit somewhere in here. Don't set a limit in this decisional area. Don't set a limit in the middle of no man's land. This is what caused the initial move. So this is going to be harder to break than these are. if you get what I'm saying. All right. So let me go ahead and delete this real quick, and let's zoom in a little bit more. So as the market starts coming down here, we get this accumulation. So this was my point of interest. This whole down move right here, I couldn't find a specific candle for this, but this whole area right here was kind of like my point of interest that I was looking for. So I drew like a huge box. I don't want to do that right now because I want to show this accumulation, but I drew like a huge box in here. Yeah, this was the accumulation. So I mean, it's pretty simple. Selling climax, automatic rally, secondary test. You have your STMB in spring, and then I was going to take an entry off of this test right here. Well, right here, exactly where I set this. This is where I was going to take the entry because this was a 108-minute candle. I remember this candle right here, which caused the spring. So that is where was going to be my entry, but unfortunately, it wasn't because we never broke this high. So, you know, it's part of my rules. Anytime I'm trading accumulation, I have to see some type of intent towards the upside. So this quote unquote spring right here, this could have just continued down, right? I don't want to take that risk. I want to see, because mind you, why this is happening, because all of this is hindsight. So while this is happening, while you're watching this schematic or you're watching this trade or whatever, make sure you have your confirmations checked up, right? Because if I did not see, I told myself, if I didn't see the market at least break this, I really wanted to see this get broken. That's why I have the line there. I never deleted it. I really wanted to see that get broken. But I said, if I'm going to at least consider taking an entry here, we have to at least break this high because this was the high that made this new low, right? Creating technically our spring. But we never trade above it. We got close, right? But we never trade above it. So technically that doesn't apply to my rules, and I'm not supposed to take a trade because if I draw this arrow out, you'll see we never closed above this high. We never showed that bullish intent towards the upside. So no trade. I didn't put this entry in, and after that, market just took off, right? So technically that's our spring now, since this is what caused us to just leave. So this is our spring, and then technically this was our test. You can call that a test. So essentially, what was next? What do we wait for next? Well, the next entry would be taking an entry off of this test, right? Let's look at market cycle. What usually happens when you have accumulation? Right? You have accumulation. The market will go up instead of coming back down inside of this accumulation. Institutions will do this. They will just re-accumulate again and continue higher. Okay, that's simply what happens. Okay, you see this, it happens every single time. You see accumulation, reaccumulation, and then the market will continue towards the upside. You'll get a distribution to come back down and test these demand areas and see whether these demand areas are going to hold or whether they're going to fail, right? Pure market cycle. Okay, so when you see an accumulation, expect a reaccumulation coming up. All right, don't try to anticipate it, but expect it. So once you see that reaccumulation, you know, okay, now I have to play the reaccumulation move, right? Doesn't mean that this accumulation is not valid anymore, but check it like this. If this is a level of demand, market goes up, right? This level of demand, market goes up and create another level of demand. Why are you still worried about this level of demand when this level is closer? See what I'm saying? So the only way I would rely on this now is if this got broken, because this is the last level of demand. So this is the last place where they put orders at. So I'm going to focus on this before I focus on that. All right. So once this reaccumulation is placed, this accumulation right here, it's still valid. Trust me, this accumulation is still valid, right? But you want to look at this first, because now this is your latest area of demand. This is where the last place they rebought the market again. Technically, they placed more orders in here. So pure market cycle. Let me zoom in a little bit. This is London, I think. Yeah, no, New York Open. New York Open manipulation went up. What do you see here? Inside of this reaccumulation, you have a reaccumulation. Side of the reaccumulation, you have a reaccumulation, right? Market continues to the upside. We come back down. Now, essentially, this where things could get pretty hard, right? So this is where I was talking about. You have two types of points of interest. You have two types of point of interest, and this is a decisional point of interest. Let me change that. Boom. This is a decisional point of interest. Okay. As you can see, the market came down here. We tapped inside, and then we came back down. But we never broke structure. If we would have broke structure, then this would have been valid. This would have been the mitigation, and that was it. But the fact that we came down here, tapped inside, and then we came back down, that should tell you the market is going to the origin. Whenever the market does that, if you have a decisional point of interest, or whatever the case may be, you have a decisional point of interest, area that's in the middle, that's not the origin, because this is the origin. This is what caused this to happen, right? This is just the continuation of the origin, okay? This is only the continuation of the origin. This is where the origin, this is the origin. This move right here, this sell to buy is the origin, okay? This is like the last place that if they close this, like if this is invalidated, then this area is done because that's the origin, all right? Meaning, you know, they can invalidate this area, and this area, they can invalidate this reaccumulation, this area will still be valid, okay? So, essentially, I know this could sound super confusing, but it's simple, guys, trust me. So, essentially, like I was saying before, you have a decisional point of interest, so this would be your decisional point of interest, right? This is like the last move right here. So, I mean, this is a clear order block, clear sponsor candle. So, that's your decisional point of interest because this is still a valid area, right? But this right here is like that last entry that, you know, it's make it or break it right here. So you have 2 points of interest. You have this, which is your origin, and then you have this, which is your decisional area, okay? So essentially what you see here, we reacted off of this area, meaning there were some type of buyers here, okay? Market goes up, right? But we don't break structure, meaning these buyers were not strong enough. Okay, this is not the true mitigation. Once you see that, if you know you get reaction off a decisional point of interest, the market goes up a little bit and then it continues down. The market, okay, excuse me. Once you see that, okay, that means they're coming to the origin. Okay. Once you see that, we get a reaction off of the decisional point of interest. The market, you know, reacts off of it for a little bit, but it's not enough to continue the move. It's not enough to break this high, or it's not enough to break the next high. Now you're going to the origin because the mitigation of this already happened. There's nothing else to be done. So when we come back down, you know they're coming to the origin. So the reason why I marked this area out was because there is imbalance over here that needs to be filled. So now, you know, you can put some smart money into it. Now you see imbalance. You see this doji candle right here that opened up at 9:30, right? That's equities open, I believe. So you have a reason for the market to come down here because of imbalance. The market likes to feel imbalance. You have this candle down here that you can target. Boom. You can set a limit entry down here if you want to. You can set a limit entry, meaning because this is a extreme area and it's either make it or break it. So why not set a limit entry here? And then guess what the market does as it's coming down here? We accumulate again, right? You see this another accumulation, sudden climax, automatic rally, secondary test, phase B, spring. We break the high. We come back down. I think we mitigate the 50% of like this whole thing, to be honest. Yeah, so after we come back down, mitigate to 50% of this whole thing, market continues higher. And then look how we mitigate this area with another manipulation. This is London Open that we came down here and mitigated this. All right. So I just wanted to show you guys, you know, some market cycle, talk about some accumulation. You know, I feel like this was worthy to talk about and share some insight on, and maybe it helps somebody, right? If you guys have any video ideas that you want to see, please let me know, because I will do them for you guys. I've gotten a lot of good responses. People saying, you know, the YouTube videos alone has helped them improve so much. So, you know, if you guys want to see any more videos, let me know what you guys want to see, and I'll see you in the next video. Peace out.